Good afternoon. This is Jim Colburn of Commodity Research Group. I'm with Andy Lebow, also of Commodity Research Group, and we're here to talk about energy markets. To learn more about us, you can check out our website, commodityresearchgroup.com, where we post our podcasts and blog. We would like to thank our friends at EKT Interactive Oil and Gas Training for hosting this podcast. Check out their newsletters, podcasts, and learning modules at ektinteractive.com. This podcast should be construed as market commentary, merely observing economic, political, and market conditions, and is not intended to refer to or endorse any particular trading system, strategy, or recommendation. You're not responsible for any trading decisions taken by anyone. Information is not guaranteed to be accurate. This is not an offer to buy or sell any derivatives. And today is May 11th. Andy, we've got two reports out today, the monthly EIA and the OPEC report, and both of them start off mentioning basically heightened levels of uncertainty. And before we get into those, let's just, why don't we give us your take on what's going on with the Colonial Pipeline?
Well, that was a little bit of a big surprise, I thought, Jim. You know, you would think that the oil industry or the natural gas industry or midstream transportation would be all sewed up and you would have their defenses up against this ransomware, and it turns out that they didn't. Luckily, it doesn't look as if this is going to be longer term. Colonial is talking about coming up at the end of the week, but we're already seeing some stockouts in the southeast, and drivers are lining up at the retail stations, and they're probably there are retail stations that are out. This isn't going to be a long term deal, but had it lasted another week or so, going into the driving season now, that could have been really serious. So thankfully it doesn't look like it's going to be. Taking a broader view, I think this was a wake-up call for the industry, and certainly, no doubt, Jim, that at the Monday morning meetings around the boardrooms of not only the oil industry but probably every industry, what do you think the first topic that they were discussing, around for the week and the month? And I'm sure every CEO started the meeting off with, "Where are we on cybersecurity?"
Exactly.
Right?
Yeah.
And and certainly, I think now, if they weren't already buttoned up, they're going, and they prove that they weren't. They'll probably, this is going to be a big initiative for industry to make sure they're buttoned up. So in a way, this was a lower cost wake up call, because it could have been way more serious than what it was.
Yeah, like any panic trader, I ran out and filled up my cars with gasoline, and I'm in New York, so we haven't felt it at all. But even the markets, Andy, the gasoline and diesel contracts, it's delivery in New York Harbor, but they didn't really, they jumped up and then they came right back down. What's your take on that?
Yeah, because in New York, we're up here at least in the Northeast, in the New York Harbor and Boston, Philadelphia, we can be resupplied by Europe fairly easily, and the Biden administration did loosen some truck and some water restrictions, some marine restrictions. Of course, Jim, what was not suspended, and that was the Jones Act.
Yeah.
Yeah, that is, that really takes, I guess that just takes an outright catastrophe to be suspended. But getting along the southeast, in the Carolinas and Virginia, and inland Tennessee, Georgia, it's not so easy to be resupplied. The Colonial is it. So, which is where some terminals and definitely some retail stations ran out of gasoline because, like you, many drivers were lining up.
Yeah, at my gas station, the guy was saying, "Hey, you want some more?
Yeah,
How much do you want?"
right.
Yeah. Okay, so uh, nothing really going on, but it's something. I guess they said maybe this weekend we'll have it up and running, so we'll see if they can make good on that. Like you said, we'll get the. I guess some of the airlines are adding stops to gas up. It sounds like the stories I used to hear about flying in Nigeria, where the pilots from London didn't want to take too much weight because they weren't sure they were going to have enough jet fuel to get back out. So maybe that's going on in the U.S. now. But let's start talking about these reports and the significant uncertainties mentioned in the OPEC report, heightened levels of uncertainty in the EIA, and they're talking about again, we're still talking about COVID and the world trying to come back. And let's talk about India. I guess we could start there. The huge increases in infections and deaths in India, lockdowns, maybe. What's going on in there?
Well, certain, obviously there's a tragedy that's unfolded there, and certain populous states have in India have imposed lockdowns. The national government, however, even though it's under enormous pressure to do so, has not. And if they were, we'd probably lose about another 750 to 1 million barrels a day of demand. Right now, I think that Indian demand is probably off because of this, really what began in April, because the March numbers, Jim, were good for petroleum consumption.
Yeah.
The OPEC said they were up 7% they were up 7% in March. The April numbers are going to be, we think they're going to be down, 300 to 400,000 barrels a day. And as I said, you can add up to 1 million barrels a day if there's a national lockdown, and that's a huge number. And the market is obviously really worried about that, and worried about continuing spread into Latin America's had problems, South America, Asia, and in Japan. So we're not out of the woods yet by any means. At least in the emerging markets, and Japan obviously is a developed market. So that's where the uncertainty is. Is
Right.
this going to spread? How, and again, where the Modi government goes in India, I think they're doing everything they can not to impose a national lockdown,
Right.
because last year that really that devastated their economy, and it in tandem devastated the petroleum demand.
Yes, and we see this in the U.S. There's you get this fatigue, and people don't want to go back to the lockdown, right?
Right. Right.
Lots of people don't want to do that. So
Right.
yeah. So
So
yep.
that's clearly I think on the demand side, that's probably the big uncertainty, that COVID still is a big uncertainty. And we've seen on these reports and some other estimates a huge increase for second half of 2021, and that's that's the whole bearish argument, bullish
Yeah.
argument. Is this big this big boom in demand.
Right. Right. Yeah. And what about overall in Europe? It looks like they've had surges, but maybe they're getting more under control now.
Yeah, the lockdowns are beginning to ease, are beginning to end in some countries. they're lifting a lot of the travel bans, which should help jet fuel demand, should help diesel demand. Well, diesel demand has been pretty strong right throughout, but it should help gasoline and diesel demand as Europe, more cars use diesel than
Mm-hmm.
gasoline in Europe. So it should help diesel demand.
And in the U.S.,
The U.S., we've done a good job. I
yeah.
think the government has really done a great job on vaccinations. Where we haven't finished the job, but I think our government's done very well. And obviously, the more people vaccinated, the better chance for growth in petroleum demand. And we have the stimulus money, and we have job creation. So, I think U.S. demand is going to, we should see a healthy growth in U.S. demand over the, through the balance of this quarter and into the second half.
So the we had a week. Well, depends how you looked in the jobs number. I guess Janet Yellen said it wasn't as weak as it looked because part-timers were getting more hours, and that kind of filled the demand, some of the demand, and that employers had. There's a JOLTS report that came out today's job survey that showed we're at record job openings. Can we really get a? So I keep thinking of gasoline demand as this pent up demand from people who are going to go on driving vacations once their kids are done with school this year. And I think over the time you've said, you really want to see people go back to work. That's where a lot of the gas demand comes from. And what are you looking at?
Well, and that's true. The biggest consumption of on highway for gasoline is commuting. Certainly, the summer driving is a seasonality, and that's adding 4, 5, 600,000 barrels a day to demand. But you want to see more and more jobs created, and even though the last number was really disappointing, it seems as though we're in a growth pattern. And that's certainly going to contribute to gasoline demand recovering. Now, it's interesting that the April gasoline demand was pretty good. It was like 8.9 million barrels a day. The government in this short-term energy outlook, Jim,
Yep.
the government is saying that third quarter demand they think is only going to be 9.0 million barrels a day, or not any higher than where April is. And I can't believe that.
Yeah.
I think they're way under.
Yeah.
I think people are gonna travel by car, and by plane. Jet fuel demand too. If you look at some of this bookings data, bookings for second half for third quarter are pretty strong. So jet should grow, and incidentally, they only have jet fuel. They have jet fuel unchanged. Oh, I'm sorry, jet fuel up 150 from third quarter to second quarter. But gasoline, I think that's way too low. I think they could be 500,000 barrels a day off on that one.
Yeah. They underestimated March and April gas demand, I believe.
Yeah, they did.
Yeah,
Yeah,
so
yeah.
they're playing a little catch up, and maybe I agree. I think we're going to see I think gas demand is going to surprise a lot of people going forward, but we'll see how
Well,
that.
some people are thinking that we're going to be, at least in the third quarter, we could be at 2019 numbers. I think we're going to be below 2019 numbers, but maybe not.
Maybe on gasoline, maybe not so much on like jet fuel keeps everything, and maybe diesel kind of.
Right. Well, jet, I think you still have, jet. There's still issues with business travel and international travel. So I think that has a ways to go.
Yeah, we in one of our conversations, Andy, you referred to I think it was a Wall Street Journal interview with Jamie Dimon, and he was talking about being in California, and maybe suggesting that maybe some business was lost because they weren't out there visiting their clients face to face. You right? You hear a story
Right.
like that, that's got to go. That's got to sort of resonate. And as soon as people are vaxxed up, I think you got to see them flying around. But you're right. The international travel may be diminished for a while. And
For a while.
yeah,
And I guess it'll be, be interesting. I'm sure everybody wants to go see their clients,
yeah,
right? You and I were in the,
yeah,
we're in the client business, and
yeah,
you want to see your clients, and I'm sure there'll be a surge, to get out and see them.
yeah. I always felt I hated going, but loved having gone.
Right, right,
Those
right.
trips were
Well, I
fun.
think, yeah,
It's just organizing it was the headache, and then but getting there and visiting with people, and you loved doing it. So
yeah. I mean, you can't eat and have a drink with Zoom. You could both.
yeah,
It's not. It's not like being face to face and sharing a meal or making a
yeah.
face to face presentation, or that's how the relationships grow.
I
And
had
I'm sure people are going to get out. So maybe jet fuel demand will be stronger than what we think in the
yeah,
in the third and fourth quarter. The key is, what is that surge? After that surge, then what happens?
right.
Or is that going to continue? I suspect, the Zoom is still going to have a place, and people may or may not travel quite as much.
So Andy, I want to talk about OPEC production, obviously, but let's let's talk about U.S. first. Are there signs of discipline? We're coming off that February crazy weather decline in U.S.
Right,
production, but
right.
is it bounced back? What is the DOE seeing, and what are you thinking on that?
Well, it's certainly bounced back from February. I mean, that was a one-off event, and the last weeklies, I think we've got U.S. production at around 10.9, and the EIA, the short-term energy outlook, is looking for second quarter at around 11, and third quarter 11.1, and then we jump up in fourth quarter to 11.3. I think it could be a little higher than that, Jim.
Yeah,
Not a lot, but I think it could be a little bit higher. I think some of the bigger companies are trying to use discipline. Scott Sheffield of Pioneer was recently quoted, or he gave an interview where he said that he was a little worried about some of the private companies not exercising any discipline,
yeah,
and as a result, that some of this, some of what he thought needed to be accomplished, which was giving some returns to the shareholders,
right.
that some of the private companies were threatening that. And if you look at the rig count, it's just about doubled from last year's lows. Ducks are coming down, drilled but uncompleted wells. So I think that it's going to be a little higher than what the EIA says, not that much higher. But then as we get into from the fourth, next year, they're looking at 11.7 in the first half,
Hmm.
and then 12.1 in the second half. So that's pretty big growth from where we are now, and that's probably on the not the anticipation, the reality of higher prices.
Right, right. Yeah. And OPEC now, they're I think they produced like 25.1 in April,
Right.
and they're for the year the call is around 27.7. Can you just take us through that
Yeah.
math? That's the OPEC report.
The OPEC report has, on the OPEC report, again, they're looking at the second half of the call on OPEC crude at 28, let's say 28.6, 28.7. That's 28.6, 28.7, and they're producing 25.1 right now. Now they have OPEC, they have production up to, well, it's gonna grow monthly by around 600,000 barrels a day between so some of the OPEC Plus and the Saudis. OPEC Plus said they thought that OPEC production was going to be around 27 million barrels a day in the second half, Jim, which still leaves a pretty big drawdown for second half if OPEC production does rise to 27 million barrels a day. You're looking based on their call, you're looking at 1.3 and then, almost 2 million barrels a day draw in the second half. So in theory, or maybe we'll see what happens, but, the OPEC Plus could increase production more in the second half.
And I mean, do you think they'll maintain their discipline? We talk about their meeting once a month now. June 1st is the next meeting. You think everybody's all in on you sort of like letting it,
except
dribble out,
right, except for Iran, who isn't part of the deal,
right?
So they again, they could produce whatever they want, but obviously there are sanctions involved. Now Iran's pretty interesting because their production's up around 400,000 barrels a day from last quarter, and that is because of Chinese demand for their crude. I don't think it'll be. I think in May it'll be down because the Chinese demand has softened in April and May. So Iran's an interest. Obviously, we'll be talking about Iran a lot coming up here with the JCPOA negotiations underway, but but getting except for Iran, we've said this. We've said this for since the Saudis and Russians got together to end the price war last year. We've said they've done a really good job of maintaining their discipline.
Yeah, and but you're looking for. So you're a little more bullish on the outlook later in the year than you are, say, right now.
Yeah.
As the year unfolds.
As the year unfolds, I mean, I am worried about Indian demand. If they can avoid a national lockdown, maybe we'll get by with only 300,000 to 500,000 barrels a day of losses, and can get through this quarter unscathed. But we'll see.
Something that we'll be watching closely is India and all the other things you mentioned. It's like looking in one of those old toy kaleidoscopes, and everything's moving around at the same time. So,
but yet, the market's been relatively stable, right?
Please, I mean, it's the EIA mentioned that Brent was $65 average in April, same as March,
right?
And they expect $65 in second quarter. It doesn't give me the confidence to go out and sell a bunch of $65 straddles, but this market has moved sideways. And if I can introduce a little option chat in here, the June at the money settled at 32.8 vol yesterday, and that's kind of like long-term average. We're right around that long-term average of 33. July is 34.7, and then DEES is 34.1. So there's a little, it's like a little bit of a contango market, and that happens when the market says there's nothing going on now, but maybe down the road we don't want to get too crazy selling options. And also the actual volatility, the historical, I think it was about 9 points under June, which happens. I mean, that stuff flips and flops, and it's not. They're measuring two different things. One's looking at the past, historical, and one's looking at the future. But maybe they're they're kind of related, I guess. So so vols probably would, if we didn't have last year where short option players got whacked, vols probably be lower than they are now. But the volume's really light, Andy. April volume was like 90,000 lots, and that reflects that the market really hasn't been moving that much. Year to date, it's about 113. So the whole year has been kind of relatively quiet in options world. But the activity, when you look at the most open interest in this option world, I'm talking WTI now, the number one strike continues to be that DEIS 100 call in 2022, 59,000. Remember we talked about that big buyer back there.
Right.
Number two open interest on the board is the DEIS 70 call in 2021 with about 33,000. And then go back to the DEIS 2022, the 98 call is 29,000. The most open interest on puts is the DEIS 50 put of 2021, which is only 21,000, and the June 50 put of 2021, which is 20,680. Now those could have been put on a long time ago,
Right.
But it just, it seems like it's light volume, but the activity, the action seems to be on the call side and going out, not today. So that's kind of what, if you look at maybe production discipline and a huge increase in demand as the year unfolds, maybe that's what those folks are trying to pick up on, that it's not happening right away, and they're giving a lot of cushion for India to get out of its its funk right now, and they're saying down the D70 call owner doesn't have far to go, and he's got a lot of time left. So those are kind of make a little sense, I guess. I don't know about the DEIS 2200 call, but I think they bought it at 15 cents. It's settled around 22 cents.
Well, as we know, right, that could be in play.
Yeah, right? Could be golden.
Yeah, it could be golden. Who knows?
Exactly.
Yeah. Well, so Jim, that was the June 50 put. You were saying the June,
June 2021 50 puts. It's got 20,000 open interest.
All right, so that doesn't have more to go.
The DEIS 50 puts got 21,000, and so I thought if you looked at the DEIS, I think a couple of I think I was talking about the DEIS 60 put you could buy for a couple of dollars. I think it was in our last maybe a month ago or so. I thought maybe oil producers would load up on that and start producing more, but I don't know. We'll have to see.
Yeah. So that 50 put, so that's going to expire, and if that expires in the money, something awful would have happened to our world economy.
Yeah, right. You said that last in our last podcast a month ago. You said you didn't see the market going below 50, and you said you could see it going up to 70, and it kind of that was a really good call last month.
I think the market does, it is exhibiting a range bound despite all the uncertainty. We seem to be just trading in a range. And
we did a couple of weeks ago. I posted in our blog the July 80 July was it the what was it the
July 80 call, right?
Yeah, sorry, July 80 calls were bought, and it was like a bunch of them over 10,000, which is a big number these days. You just don't see options trading over 10,000 contracts, on a regular basis. It just doesn't happen anymore. So,
it's possible. There's obviously a lot of bullish enthusiasm on commodities, and copper went to the moon, and I think a lot of the spec flow has been these melt up, not melt down, but melt up like copper's doing,
right?
And certainly where petroleum can be looked at, I guess, not by us, but by others as a financial asset.
But I think you always talked about, sometimes you just can't look at the year-to-year comparisons and think about last April where we were in price.
Oh yeah.
compared to now.
That's for sure.
That looks like a super cycle.
Right. That looks like a super cycle. But yeah, I'm not. But and the other difference in petroleum is we have plenty of spare capacity. Some of these other. I think there's obviously much less in
Right.
copper than
Right.
in petroleum. But I guess the point I'm making is that we get these spasms of cycle buying or inflation buying or whatever you want to call it, the reflation
Right.
trade. I don't know, but
Yeah. And
maybe that July 80 call was part of it.
and there's certainly a lot of competition for the speculator's dollar.
Yeah.
When you think about cryptocurrencies, you think about the copper story is just, even though it's run up, it's still very bullish. There's plenty of demand, no supply. I keep hearing that.
Right.
And there's where are you going to put your speculative dollar? It's you could go in a lot of directions on that. So
Right.
So let's talk about prices going forward. We're in the mid 60s, say. What are we at? 64 WTI today handle, and let's give us a couple of months out. What do you think is going to happen with price of crude? Are we staying in this area?
I think we are, Jim. Much as I hate to say it, I don't think 60 to 70 is out of the question for for WTI. I do think on the bullish side, as we've been saying, it does look, the second half balances look pretty bullish, but that can look, they look bullish.
Right.
But that certainly can change depending on where OPEC goes, U.S. production, where we are on demand. Does it come in as strong as some people think? So that looks bullish. Near term, as I mentioned, I'm a little bit bearish, but certainly one very bullish development for WTI is in the near term is the crude runs are going to have to go up.
Right.
As demand grows. So, we think their crude runs could be up for 1 million barrels a day over the next couple of months. So we're going to have to import more, export less to keep it balanced. And we're not. I think stocks are going to draw for WTI over the next couple of months. So that's going to keep things, from coming off pretty hard. And, so I think 60, 70 later in the year, can it get into the 70s? Yeah, I think it could.
Mm.
Could it get up to 80? This not I don't know.
Yeah, but that's
I don't know. I don't know.
Yeah, you're getting your nose is bleeding up there, Andy.
Yeah, definitely.
Yeah.
Your nose is bleeding.
But do you see a scenario that we can start going after the 50 put in the second half of the year?
Well, the scenario would have to be that OPEC Plus decides to provide even more barrels than what they've planned for, what they said they're going to do.
Mm-hmm.
So and demand comes in really soft. And certainly that COVID remains a problem in the second half.
Yeah.
That it spreads, that these variants spread, and the vaccines aren't effective.
A year out.
That would be bad.
Yeah. Yeah.
For all of us.
I know.
Right.
Yeah.
I mean, do you see 50 as in play, Jim?
You know what? You never see it, but I'm thinking that buying that put is the contrarian play.
Right.
If you had if this is a puzzle and you say solve for the contrarian idea, that would be it, I think.
Right.
But,
yeah. Listen, you can never, as we've said so many times on these podcasts, you can never say never.
No, you never say never, but it just seems like, have you heard anybody give a bearish scenario for crude going forward?
No, and that's bearish in it itself, obviously.
Yeah.
And I remember, I think it was either in 18 or 19 when the fourth quarter looked so so bullish. We were all like bulled out of our minds. And, the market just it
Yep.
didn't happen.
Right.
The fourth quarter ended up being soft.
Yep.
Yeah, that took a lot of people out. So I think that's a really good point, Jim.
Yeah. So
What they used to call that, was that what it was called? The contrarian index? Remember that
I'm sure
index that
yeah.
used to come out?
Yeah. Then everybody became a contrarian. So then what do you call it?
Contra contrarian.
It's like a double mutant virus.
Right.
Okay. What did we miss, Andy? Anything you want to wrap us up with?
No, I think we covered a lot of ground. We're coming into the driving season, so we'll be watching. I think the market will be, and it has been, believe me, it has been watching these weekly gasoline numbers, the demand numbers. I think that's like that's the number one focus in the market, and jet fuel too.
Yeah.
Watching these weekly apparent disappearance numbers and the U.S. production numbers, but these weeklies are going to become increasingly important.
I've been watching the New York City turnstile numbers, and it's almost like a confirmation that New York is coming back, because it bounced off the lows and it was chopping sideways for a while, and then the last couple of weeks it broke out to the upside. So I wouldn't say New York is back, and I don't think New York's coming back for a while, but it's much livelier than it was.
Well, the offices, a lot of the banks are calling their workers back in in June and July, and a lot of these banks are saying, we were all talking about the hybrid and maybe they'll work 3 days a week from New York and 2 from home. And it's not that, Jim. It's like you get to work, get in the office, no hybrid.
Right. So I'll leave you with this final question. Would you rather be trying to count oil barrels, figure out what OPEC's going to do, what demand is, or try to predict non-farm payroll employment?
I do these weekly EIA estimates, and they're published along part of the survey. They're hard to do.
Of course,
they're really hard to do. So I've missed big time. Not quite as big time as some of these big time economists missed for the non-farm payrolls, but it is.
I love their enthusiasm each month when they lay out their numbers on the the financial news. It's very optimistic that they may actually be in the ballpark this time. It's not easy, as we know.
It's really not easy. And as you know, Jim,
of course,
I get so excited when I hit it. When I finally get it right.
Right. Yes, and you do a better job than most.
I try.
Okay. Anything else? We're good, right?
If you have any questions about the podcast or want to get a hold of us, you can reach me at Lebow, ALEBOW, at commodityresearchgroup.com. We have a website that Jim posts just often. It's pretty it's always interesting stuff. commodityresearchgroup.com, and you could reach Jim.
Yeah, the best place is to look me up on LinkedIn. I think that's where I'll take like a greatest hits of stuff that I've posted on our blog and try to put something up once a week, and actually get quite a bit of chat going with that. Mainly not in the comment section, but with one-on-one stuff. So please reach out, and I pretty much accept everybody as a connection. So
yeah, and I'm on LinkedIn as well.
Terrific.
So yeah.
Okay, Andy. We'll talk to you next.
Jim.
Talk to you next month.
We'll see you next month.
Okay.